Hello Market Club members everywhere. Adam Hewison here, coming to you from the digital studios of Market Club. And what we're looking at today is the S&P 500 cash market. And unlike the Dow, which has actually moved into a sort of more a neutral position, the S&P 500 and the NASDAQ are still in a longer-term negative downtrend. All we have to do is put our trade triangles on here, and you can see both the weekly and the monthly are both negative, indicating a lower trend, and the momentum is picking up. Now, if we close down below yesterday's low, which was 1,924, and we're currently below that number now, I think that's a good indication that we've topped out. And one of the reasons I say that is because of two things. One, we have what I consider like a box-like formation here, sort of big trading range. And also, if we go below the 50 line today, close below the 50 line, I think we will, if not today, tomorrow, then I think we'll see a pullback possibly to the 1850 or even the 1800 level. But longer term, we are still negative on this index. Now, the NASDAQ is not as strong as the S&P, and it's certainly not as strong as the Dow, but again, we're very close to going below the 50 line. You can see that here, and I think if we go close below the 50 line today and the type of action we're seeing here, I would probably want to be short because I think we'll see this market. I think the risk at this point in time is very, very small, and I think we'll see a pullback down to these lows around 4,200. So again, negative on this. We see both our trade triangles are negative, and we are seeing more of a negative feature today. The momentum, this was all short covering, in my opinion, really not more than that. No new buying came in, and I think we're going to resume the downward trend. I think the bad news is going to start to come out, and certainly the economy is not firing on all cylinders, that's for sure. Now this is Tesla Motors. We haven't talked about this for a while, but the action, it looks like we've just had a recovery, but with cheap oil prices, I can't imagine people running out to get Tesla cars that are very, very expensive. It's only for a very small group that can handle it, unless they come up with a new car, which they're coming out with. Hopefully that's going to be a lot less expensive. But two things you want to look at here, in my opinion, and that is one, the situation where you have the RSI line, which we talked about before. You can see that's right here at 50. It's right up against there. And also the type of action we're seeing today, which is a doji line. Now, if we close in this market below the low of yesterday, or we actually go down below that low, it would not be a good sign for this market. And let me explain to you why I think that is. So let's just clear the screen, and I want to go to a maximum on Tesla. So here we are. I'm going to take all the trade triangles off, very clean, just a close-only chart, and you can see the highs here. We're trading up towards the 280 level, and the low right here was down to the 185 level. So it's almost $100. So you can take $100 from this low point, and that takes you down to at least down to the 100 level or even lower in this particular case. So here's the formation that we're looking at. So we move up, we come down, we move up again, and we come down, and we go below this low. Now this low, as I mentioned, was 185. Okay, so when we subtract the highs, which was let's just call it 285 just for make the math real easy. So it's $100 approximately from this point to this point, and then we subtract $100. It takes us down to somewhere below $100, around the $85 to $100 level. That's where we think Tesla can go. And as you can see, it started off right here, right around a very low level, $30–40, and it's had a big move up, but things have changed, and that's the reality of the markets. So let's take another look at another indicator, and that's our Fibonacci retracement. So the Fibonacci retracement, you start at the very highest point, you drag it down to the lowest point, and that gives you 122. So I think that's at least the minimum we'll see this market go. And 122 dovetails very nicely with this previous low, which is around 121. So that would be a normal place to support. So our first target is going to be 122 on Tesla. Currently trading at 176. We expect this market to go lower. So you can see the trade triangles are both negative on Tesla at the moment. This is Apple. We gave you the number today, and the thing we should be short Apple. This is not, first of all, Apple has a big fight with the FBI. Not a smart thing to do. They could have done this very quickly, privately. Nobody would have known. Just open the one iPhone, bingo, done, destroy the malware, that's it. But they chose a very open platform to argue. Not only that, the glow of the iPhone has faded. people are looking at some of the Android phones, which are very, very good. They're also looking at, now Apple's come out with $15 a month and get a new iPhone. So they're really trying to keep this cash cow, which really is the essence of Apple right now, alive. I think we're going to see this market continue to move lower. And if you look at this chart, you can see, I'm going to take all the trade triangles off so you can make it very clear. You can see it's really not doing too well. And if we put a long-term trend line in there, we'll start from the lows here, draw that up to here. I think we can see this market trade down to at least the $80 level and possibly even down to 70. Let's see how that plays out. But let's just do one more thing before we jump out of this apple. Let's just put our Fibonacci retracement levels on here. And you can see 84.68 is a 61.8% retracement, so I would think that would be a logical place, about another 10% lower than we are right now. So let's see how that plays out. This is Alphabet, now known as, the symbol is Goog, but it's really Google. So if you scope this out, let's get a little closer in 6 months. And you can see the action here is not looking that favorable in my opinion. We're below the 50 line. You see we can't get over this 50 line, resistance, resistance. I would say if we close below, or we go even below 694 today, you want to be short. Both of our trade triangles, I believe, are still negative and indicating the longer term trend is down for Alphabet. Last stock is Disney. We had a weekly yesterday, but it looks as though it's trying to dance around the 50 line, which is resistance. And if we get closer, and let's just do 6 months or 3 months, you can see, I think if we close below the lows that we saw here, 94.56, we're 95.50, so another dollar lower. I think that would not be a good sign. I think we'd see this market resume its downward trend and at least test the lows that we saw here on the 86 level. Again, this is ESPN is a real cash cow, but they're losing subscriptions and viewerships really quickly. So let's see how that plays out. Okay, that's it for today. Have a great trading day, everyone. I'll be back tomorrow, and let's see how these markets play out. But again, it looks to me like the short covering rally and the indices are over with, especially if we close quite a bit lower today. Have a great trading day, everyone.